Good evening. Welcome to the end of week review for this week. And this week is week 24. And we are still in we are in the final stretch of final 3 weeks of Q2. Q2 we have 26 weeks. So we are in week 24. So 2 more weeks we will be done with Q2. So we want to see how the market gonna close out for Q2. Very critical to keep that in mind. So we are in week 24, and here's our economic calendar for week 24. We have a CBI. So CBI is a very high impact news. If you trade market, then CBI is like your bread and butter right there. And later on, when we dive into the charts, you can see that we have a very beautiful setup on the CPI release at 8:30 on Wednesday, June 11, right here. By the way, this week we have five trading days, so it's a very beautiful week for us. It's easy to trade. By the way, we haven't, this week we so caught up with other work, other trainer work or other live work. So we have two live work. So trading is our one live work, and then we have another live work. And we're so busy with our live work, so we take very little trade. I believe we take on a practice account. We blow up our main account for this building circle month, which is June. We blow up, I think, the first week of June. The last week of May. So we have to wait for the next building circle, which is the end of this month, so we can do trade again. So we trade with practice account. Also this week, they say, or people say, or a common practice say that the non-farm payroll is the first Friday. So non-farm payroll is first Friday of the month, in this case June. Then you have a CPI right there at the second week, 11 Wednesday. And next week we're gonna have a Fed meeting, Fed FOMC meeting. And then at the end of the month we're looking for the GDP data right there. It released on the 26th. So we have a lot of things that keep ourselves busy. Let's go to the Fed meeting, which is gonna be after CPI. Fed meeting. So we just download the group, so we just ungroup them. So the Fed meeting is gonna be June next week. Wow. So that's gonna be a firework right there. So this month is the market gonna move a lot for this month. That's what we're trying to say. Keep in mind, in May they don't have a meeting, do they? They have meeting in May. They skip April, I guess. So May, June, July. They keep August and November. We do have October. All right. So the ends of the month we're gonna do GDP data. GDP data is not high impact like CPI or non-farm payroll, so just keep that in mind. Alright, so let's see how the market opened this week on Monday. Let's see. So here's the swing chart we take at the beginning of the day on Monday. We take at 6, almost 7 Eastern time right there, and on our left is the weekly candle or weekly time frame, and on the right is our monthly. So I look at the level that we are marked right here, 58.48. What do you see right there? So you see the fellow gap right there. So we anticipate. So if you look at the monthly time frame, you can see the setup short right there. So the favorite gap down, and you see right there level. You see that is break that level. It break it down and it reverse and look for the candle gonna flip. If it go down to the level again, it could break that level, the 58.48 right there. That's what we anticipate. Or you look at that level, you can see that also bearish, 59.27 right there. So steps from below, break, it will reverse. Let's see how the June is operate. Close out. So you look in the weekly, you can see right there. If you mark that level, see that level? Yeah, let's do edit them. See, can we draw something right here real quick? There any two to draw in here? No, nothing to draw. Very interesting, huh? Markup. What's the markup? Markup keyword. Oh, okay, right here. It's some kind of drawing right there. So that's fine. So you mark right here. That level. You see that? Test 1, test 2, test 4, break, and it may reverse. So that early of the week on Monday we can see that. And that's it, the open of the week. We will come back to see how at this level it performs. So cancel. No, we're not gonna say anything. So that's the whole idea that you mark the level, you see that? Test 1, test 2, break and reverse. Test, break and reverse. That is a type 2 reversal. Now type 2 is 4 breakout type 2. So here we have 4 breakout type 2. See that? Right here, type 2. So we trade our here's the framework we come up to trade. Basically 4 breakout have 2 types. Type 1, which is on the left, and type 2 is on the right. So type 1, the setup we talk right here is type 2. Test from below. It can be more than one time. In this case, for simplified version, we just do one time. Test from below, break and reverse. That is the 4 breakout. And that is the right here we're talking about. In this case, it tests from below twice. Break and reverse. That we anticipate. We can see that if this is the beginning of the week, so if this week gonna be break back to the level and close to that level. And turn out it is, right? This is the real chart right here when it's close out for today, Friday. It break that level, you see that? That is the level that we're talking about. That is the level that we are. Something like that. Let's delete that. Move up here. That's the level we're talking. And let's see how is or maybe we give it level. See that? Now simple. It's more simple than, see that? Alright, test from below, break and reverse. So that is the type 2 right there. Yeah, let's keep it level. It's much easier. Yes, much easier to work with. That's right. What's the high of this candle is 59.93.50. 93. $93 or $95? Alright, so it worked. Yeah, 93.50. Yes, beautiful right there. You see that? That's what we want to see. Yep, 93.50. Oh, come on. $93. What? See that? So this way much simpler to handle. Like this one. That's weekly right there. That's type 2 for breakout. That's from below, break and reverse. That's what we're talking about right here. If you mark this level, that's from low, break and reverse. And that's did happen. That's amazing right there. Yeah, that's how it opened. And let's look on the daily time frame. Right, when we take screenshot on Monday, we mark that level. You see that level right there at 60.25. We see that it tests from below, break, and to see if reverse. So that's our Monday. Yeah, June 11, Monday right there. Hold on, June 11. No, this is cannot be. It is Wednesday. Not we go to the wrong one. We go to the wrong day. Okay, that is the Monday. Yes, that's June the 9th right there. It's Monday. We did mark the low. We see that it tests from below, breaks, so we anticipate that it may reverse. And let's see how it closes up Monday. The close of Monday right here. End of the day Monday. Right, it's just not moving much. You see that? It just stay there. So instead of reverse right away, it tests from above one more. That is the Monday right there. That's the Monday. And now let's see. We have that recap. That roll back the tapes and we watch to see what opportunity we see on Monday. here are the tips we have on Monday. Keep rolling. One thing you can see that the London trading section is still in the prior PM, which is the last Friday. So we really want to see that if this gonna come break this one, break and take out all the buy side liquidity right here, which is the high right here, and it's gonna be make a Judah swing. The whole idea of Judah swing is a huge with liquidity and boom, it reverses right away. So basically we want to see something similar to this. Alright, here's the Judah swing we want to see. We want to see the Judah swing, but you know what? It's very close right here. It may not happen. Basically, we want to be at 9:30. We want it to be a real swing. So you want a huge swing right here. Take liquidity. Right, take the liquidity. It will be better if it's just right here. That's the level. So you want something like this. You want it test. You want it to be test from below. Right, break, and then you want to see a huge reverse happen. That's the whole idea of Judah swing. And then sell. Maybe go here, take the low right there. So that's the anticipate for Judah swing. Whenever we see that London is still in the range of the prior day BM, then we anticipate that. Yeah, let's see it happen on Monday. Alright, let's see it. So go back to the tip to see that happen. Yes, so it swing at what time, but it not at 9:30. The perfect alignment is gonna be at 9:30, but it did not. So what time is in the PM? Then yeah, you see that the Jun13 is not happen. Let's see what happened at 9:30 then. Lower tab 9:30, you see that 47. Yes, it's a sell-off right there. So you don't want that. Okay? If you want it to be a Judah swing, then you want it to be boom. At 9:30, boom. So there will be no Judah swing in here. If this move like this, it will not Judah swing. You want the 9:30 gonna be swing up right there, like we say right here. Yes, we want the Judah swing. We want the 9:30, boom, and then sweep. That means there will be no Judah swing for the 9:30 for the Monday, and it turned out right. There's no Judah swing. It is what it is right there. Yes, so there's no Judah swing. Let's review what we mean by Judah swing. The phenomenal right here. So right here, we take the term from ICC right there, it's Judah swing. In this case, it's a long setup, so it take out the low of the prior day PM right there, and then it reverse. So here, I think they use maybe 5-minute time frame. That's the reason why you see a lot of candle right there. So we use 15 minutes, so 3 candle of this. No, 15 minutes is equal to 3 5-minute candle. So that's an idea of Judah swing. It's sweep liquidity. Let's see let's give some example we see. Alright, it takes for us for a while to find a example how Euro swing work. So you see that the London is right in the range of the PM, the prior PM, and you see that 9:30 it go up. So it's go up, it create that liquidity, and then boom, it reversed right away. So that's a typical example of Euro swing. So go back to Monday. We thought it gonna happen. It did not. And the reason why, because the 9:30 show the markets, because the 9:30 forming, then the market tell us that it's not gonna be a Euro swing. You want it to be go up here and raise the green, but it did not, and that we will know Euro swing. So stay away from this. And I don't think we take any trade on Monday. Oh yeah, we do. Let's see what mistake we make with lesson we learn. Let's see if we make any trade. We did take a screenshot. You see that is on Monday. Oh, we trade the PM, and you see that. So that's a 9:30 right there. So we anticipate there lots of liquidity sell side right here. So as soon as we saw that, yeah, 2:30 right there. Yeah, we're going. Beautiful, right? That's beautiful. We add more contract. Boom, we have some profit right there. Then we debate whether we should take 10 contract off and let the rest run. And we could make decision. So we let it go. We stay in the trade with 11, and then boom, you see that? It stopped out. Yeah. So the minute we saw this go up, we say, wow, it's gonna be go down. But at the moment we say, oh, we don't want to do, because we already lost. I don't want to take, we don't want to take a revenge trade, so we just stay out. But you see that it happened. So if we go there, because after that we busy, we have to go back to our live work, so we don't have time. But after that, you see it start go into our direction, and then we come back and say, wow, we can follow here, because it may go further down. So we go back in, we take the trade. You see that it looks scary. It almost, you do see that it look almost take it out again. But lucky, see that? So we have a 4,000 profit right there. We move to break even. Okay, so eventually we decide, so that's good enough for it, because we go in late. You remember the first trade we chased right here, and we got stopped over here, and then we got busy. We don't have time in front of computers, or in this case iPads. So we have time, and then we have time come back. We saw that we take a quick profits right there. So that's a 2 trade right there, 1 loss, 1 win. So that's the Monday. Yeah, so we take advantage right here. Alright, that's we wrap up for Monday. Now go to Tuesday. What do we see on Tuesday? So here's what we see on Tuesday. Alright, so we see the Monday right there. Alright, it break. We anticipate that it may, it touched that level from above. It may reverse right here on Tuesday. That's what we anticipate. And let's see how it close out on the daily. We didn't take screenshot. Very strange. We forgot to screenshot. But anyway, let's look in the what the taps again on Tuesday. Okay, so we see that we want the tap right here on Tuesday. So we want the tap on Tuesday. You see that? So you see that the Monday open, the range right here is huge. That can give us some idea that it could be a very range week, right? Yeah, you can say that. And you see that the London, you see the Asia take the high of the Friday PM, and then the London take the low. So that means it make huge range right there. And the range is also overlap with the Monday. So it can tell you that it's gonna be a very range week, very consolidated week right now. Or at least for Monday and Tuesday. And it will build up for the CPI release on Wednesday. But right here you see very interesting at wow, 11:30. Is that right? 11:30. Yes, that's a huge down move right there. And what is okay? So at 9:30. Yes, that's the 9:30. So in this case, there will be no euro swing for Tuesday, because this condition is already sweep liquidity on both sides. So there's no euro swing. Yeah, that's the lesson we learned. No euro swing. On Monday we anticipate euro swing, but it did not happen. But on Tuesday it's so clear. There's no euro swing. There's no way there's euro swing here. That's the lesson learned right there. So there's no euro swing because liquidity already swept both ends of the Friday. Yeah, here's the screenshot we take for 15 minutes time frame right there. So that we need no euro swing. Yeah, let's take this right here, take a note. Yeah, so here's what we mark. So it rate the high, which is a buy side liquidity, and the low sell side liquidity. So there will be no euro swing for this. There's no way. There will be no way euro swing. Maybe a little bit. Maybe if we go down here and rate one more and boom. That can be a euro swing scenario right there. Yeah, but we look at the tips. Look at the tips. We see at 9:30 it's around this level. If at 9:30 it down here, then we can see that it's a euro swing because it rated liquidity twice. Then it's gonna be explosive right there. Or vice versa. It's at 9:30 go up here, then boom. But at 9:30 it's right in the open right there. So we will know euro swing. Keep that in mind. So let's go back to right here. So on one. Remember on Monday we saw that it may be euro swing. Okay. But on Tuesday completely there's no indicator. It's not indicative of euro swing. Yeah, let's give some verbiage right here. So basically we have a buy side liquidity sweep right here, and then we have a sell side liquidity sweep. Then this condition will be there's euro swing at 9:30. Not likely. not likely to happen. Let's go with the verbiage right now. Yeah, not likely to happen. Alright. Yeah, let's say this one. So let's revisit the Monday. You see the Monday right here? Because the London is right in this range, so it may set up for a euro swing. So it's nicely, so we anticipate that the euro swing may happen. We want the euro swing, so we anticipate the euro swing might happen. Here's how it happened. We anticipate right here the euro swing around 9:30. The 9:30 have to be somehow 9:30 right here. Let's say we have a 9:30. Yeah, want something like that. If that makes sense. Right? It would be perfect if something like that happened also. Before that, we want it to be like this. Yeah, you want it to be like this. Let's fill out color like this. And yeah, for this one we're gonna limit. We don't want too big, too thick for that line. Yeah, so you want something that you use with 9:30 right there, and also will be perfect if it do something like this. We want it to do something like this. Let's say it tests from below. In this case, we want a little bit bigger for this one. Yeah, so we'll test from below, and then it's break, and then it gonna reverse. Something like that, right? And then it's, yeah, so we anticipate something like that. Like that's the whole idea right there. That's the euro swing we anticipate. At least it gives us that it may happen, but for Tuesday, there's no way it happened. Tuesday, there's no way it happened. Let's edit this one. So basically, we say that the euro swing at 09:30. In this case, might happen. But for Tuesday, it's completely out picture. You wanted to see that. And if it happened, it had to be in this way. If it's not in this way, we're not a trade. That's okay. So we say that euro swing may happen if, yeah, let's put it right there. If that right there. So if this happened, then that's the euro swing. But if that's right there, yeah, save this one. All right, so that's the comparison between the Monday, and let's look at the Tuesday. Tuesday, then there's no way it happened. You see that? The Tuesday, the liquidity always with both ends. There's no way the euro swing happened on. See that? It's not like it happened. But on Monday, it might. It might if it follow this. The reason why is both Asia and London is in the range of the PM. Right? So, but in here, it completely opposite. It will not happen. That's the whole idea. See that? Alright, so now go back to the tips again. Alright, now we roll the tip to see. Okay, so at 9:30, usually it's right in the middle, so it may go back and fill this gap. Let's see how it happened. Yeah, see that? It filled the gap. But as soon as it fills the gap, you see right here, after it fills that gap, it's reversed right away. But right here is huge. If you go in right here, you better take profits. So what is this? What time is this one? So this one is 11:30. Is that right? 11:30. Yeah, 11:30. Let's roll a little bit back further. Yeah. Well, let's stop right here. So, yeah, 11:30. The 3 minutes, just 3 minutes into 11:30. That's a huge sharp right there. Oh yeah. You see that? The gap right there. Let's go back to the charts to see what in there. Here's our 15-minute chart. So right here, that is the 1 o'clock. No, right here. 11:30. By the way, we mark this is a Monday open range right there. You see, that's the whole week. It just go back and forth. Okay, so go back right here on Tuesday, 11:30, and you see the gap right there. Yep, that's the gap. And yeah, you can see right here. Yeah, but we don't see any setup right here. We really want to see if it break, reverse, but we want some test right there. So not much we can do right here. Yeah, there's not much we can do. Yeah, not much we can do right here. Not much we can do. Maybe. Oh yeah, we see maybe same setup right here. So we are still in Tuesday. So right here we have a candle range right here. You see that's a huge move. You mark the level and you see the test from below, break it and reverse. That is for Tuesday right there. The 10. That's the setup test. That is for breakout type 2 right there. See that? Test from below, break and reverse. That for breakout type 2. You see the level Yes, test from low, break and reverse. This test from low, it not look attractive. It will be, if this gonna be the close gonna be right here, that will be more attractive. But at least we have set up. There's no reason to come back to the level. It test from low, it already break that. There's no reason for it to come back. The only reason to come back is to break it. So that happened at 150. Let's see on that day, do we do any markup for this? Yeah, here the screenshot we take at the end of the day. So we just mark the time frame right there. Yeah, we do see that. Now let's do some mark, some note right there. So basically we have test from break and reverse, and that happened at this hour. Yeah, let's take a screenshot. So what hour is this one? This one we know that is what time? 13:50. 13:50, which is 1:50. Okay. Let's do a edit right here. Alright, we still have a lot of time, but we take our time to learn. So basically you have a condition right here. You test this one, right? You test from below, you break it, and then you reverse. And then, yeah, we don't have enough restate right here, so how can we do from here? Okay, so we can do that. Okay, so that is the setup. So the very first step we're gonna see is the test from below, test from below, and then the second we're gonna have break it, and then step number 3 it's gonna reverse, and in this case it's reverse. Yeah, it's reverse right there. So basically we have a 4 breakout type. Is that type 1? No, it's type 2, and it happened at 11:50. That candle is 11:50, which is we have 3 steps right there. You have test from below, you have break it, and then you have reverse. Yep. So that is a type 4 breakout type 2 right there. That's a decent move right here. Alright, let's save this one. By the way, we just fix it. It's not 11:15, but it's 13:15, which is 1:15 p.m. So we fix that. Yep, so let's get out of here. That is our Tuesday right there. And now I want to see on Wednesday how that performance, because remember the Wednesday is the CPI data. Yes, that's the CPI data, and you can see that the 8:30 right there is open, and that's right. Let's see what happened. Okay, so right here, oh yeah. So look. Here's the screenshot we check for Wednesday. So what do you see? You see it's similar to, very similar to Monday, which is the London range and the Asia is right in the range. It's not exactly, the Asia did rate the high up there, so it's not exactly on Monday, but it's very close. It's not exactly this one still in the range. It's not exactly very close on Monday when we anticipate about the euro swing at 9:30. Let's pull up the Monday again. So here's right there. You see the Monday? Yeah, it's right there. But the Asia did not take. So it's not exactly, but it's similar. You see that the range right there? Yeah, the range in the Friday PM right there. So we want the euro swing because also keep in mind that Wednesday you have the CPI. So when the CPI go huge up right here, check liquidity, all that, and then boom, it will reverse. So let's see. Yeah, so we go into exactly. But in this case, it tried how many times? It tried 1, 2 times, and boom. So the Wednesday gives us a beautiful setup right here. If you mark the candle after expansion at 8:30, so a 45 right there, and look at West is out at 9:30. Yeah, 9:30 right there. You see that the range right here, it did not rate high, and then right here you see the low, it touched from below. But right here you can see that level give a lot of thing right there. So the best setup is around here, exactly in this case is 1 p.m. 1:30 p.m. You see that level, test from below, break and reverse. What that call? That is the type 2 reversal. We saw everywhere type 2 reversal right there. Right, test from below, break and reverse. Test from below, break and reverse. So in this case, the reverse right here is just a continuation of the down move right there. Give us some idea. Yeah, continuation. Okay, let's take the screenshot. Do we see anything else on Wednesday? Yeah, let's take the screenshot. Let's put the time right here, so we know that it's the right there, 30, perfect. Yeah, the setup best is right here, and we can see that level, perfect right there. And that's a screenshot. All right. So what we see right here. So we have the setup. So you have this. Yes, start from below, and then you have break it, and then you have a reverse. How's that beautiful? Alright, let's put some rotation right here. So you have touch from below, and you have break it, you break the level, then there's no reason to come back. Only come back for reason is to reverse. In this case, it's reversed at 130, exactly 130. And what we call this, we call is a full breakout type 2, right? In this case, it's a continuation right here. Down move, first leg down, second leg down, boom, third leg down, take all the sell side. So in this case, we call it a continuation. It's not reversal. And keep in mind that type 2 happen a lot in the continuation, and type 1 happen on the reversal. Okay, so you have touch from below, break it, and then you have reverse. Yeah, that's what we need. Okay, let's save it one. All right, we just save it. Okay, one more thing we need to do on Wednesday. Remember that we anticipate the London may happen, but this signal tells us how it gonna happen. So basically, you see it go up here, it did break the high of this, and then it's reversed, but it reversed in a very fascinating, right? Not reversed right away. It's 3 leg down, 1, 2, boom, 3. That's how it do Judah swing. But in this case, you don't see. Yeah, you don't want that. If this go up here, then it's gonna be a huge Judah swing. But it did not. It go down. That tells you that wait for PM. That's another story right there. So if you don't see the Judah swing at 9:30, then don't trade. Wait for the PM. That's another lesson. Another lesson right there for us. Okay, let's see right here. So the Judah swing may happen, right? But the only new already very close up, like on Monday. So let's say that, and because the CPI there also, the injection liquidity already happened before 9:30, so it's not likely gonna happen, right? But let's go with this. This is in the range, and in order for it to happen, you want at 9:30s, right? Like we say at 9:30 right here. Yeah, and then you want it to go down. Yep, so that we anticipate. Okay, let's draw the line right here. Let's do better job. It's not straight, so make sure it's straight. and let make the thick too thick. We don't want that. Yeah. Okay. And here's what we are anticipating. Okay. So Euro swing at 093 might happen, but look at the condition that we can see that the Asia the rate the high at Friday PM, right? So that's one of the conditions that it's not gonna happen. But however, if we see the euro swing here right there, that might happen. And also another that's because it's the CBI day, so liquidity injection, right? Already takes place at 0830, so just pay attention. Yeah. Okay, so let's save it. All right, we save it. Yep. So let's see. Boom. That is the tip right there. Okay, this is for Tuesday anyway. Okay, now look at Thursday to see what do we see. What lesson we do. We do learn. Thursday right here. Okay, so that may not be your swing. Okay, it's not in the range, but may not be your swing. But it already rated low. It may swing low one more and then reverse. That could be happen. So let's see how it happened on Monday. I mean on Thursday. All right, here's right there. Right there. Okay. Where is 930? 930. Yeah. So that's the 930 right there. So it may not happen, right? If you want a 930 low right here, that means it right there. So the euro swing may not happen at 930. See that? If he really go down here, then boom, we can see. Yep. Let's check the screenshot. All right, so 930 right there. You see that? You want to swing huge, take this liquidity, but if not, then there's no euro swing. Okay. So let's take this screenshot. So check this screenshot right there. Yeah, so we check screenshot. So we see the condition that it already rate the south side twice, 2 times. So it's not gonna be rate again. So the euro swing not gonna happen. That's the whole idea. Okay, so go into the tapes. What we see. The 930. Oh, it continued the trend. So it's not gonna be euro swing. Wow. Even though if not euro swing, can we check advantage? You can see right here that the open Yeah, let me go into the chart to see. Yep, but it continues. Let's go to the chart. So right here, any opportunity we can take advantage. Okay, so the old one right here, we see any pattern. Yeah, it's very hard to trade right here. It's okay. Yeah, we don't see any 8:30 and then 9:30 it break London. Yeah, not much you can do right here. Maybe right here. Oh yeah, you can see right here at 9 you see test from below break. That's right. Oh, but it's not anything. Test from below and 1 reverse. Yeah, not much opportunity. But anyway, on Friday, I think we saw two setup beautiful right here. You see that? So you have test from below, right? You have a test from above, break and reverse. And here we have what? Test from below, break and reverse. They both type 2 right there. Let take screenshot and then we wrap up here. So what do we have right here on Friday today? So basically right here you have the test, break and the reverse at 10:30, and here you have what? Here you have a test from below, similar right there. This is test from above. This one is test from below. And then you break it, and then you reverse. Well, let's see what lesson in here, what for breakout type in here. Is type 1 or type 2? So go with this one first. You have one test from above. Test from above right there. Alright, and then you break it. What else? And then you reverse it. So what does that sound like? It sounds like type 2. Right, so we have type 2 right here, and 4 breakout type 2, and the time stand at night at 10:30 right there. So yeah, that's from above, break and reverse. That's type 2. Oh yeah. In this case, it's continuation. You see that? It's the first leg up, and this is a retracement, and boom. So, oh yeah. And it's a continuation. If that makes sense. It's like that. But interesting in here, in this scenario, what do we have? Is in this case we have reversal. It also type 2, but it's a reversal. So it's test from below and break it. And then you have reverse. Is that wonderful? Here in one day you have the same setup as twice, but in different scenario. This one is continuation, which is second leg up, but this one is reverse. This one is at exactly 1 p.m. right, and this in this case is a reversal, not a continuation. So the same idea, you test in this case it is short, it's test from above. Remember this one is test from below. See that? Test from below. And you break it and then you reverse. Okay, let's save it. Alright, so we say in this case is continuation versus reversal. Alright, we gotta go. We gotta get out here. Thank you for your time and interest. We're always grateful for the opportunity. We do what we love, the success is coming our way. Day by day, little by little, in every way we're getting better. Have a great weekend and see you next week.